Today, we're going to have a heart-to-heart about our relationship with our bankers. And we know that our bankers are incredibly important to everything that we do, not only our money, but our prosperity. But the question is, are we being fleeced by our bankers? That's the question we're going to talk about today. Well, today we're talking, of course, about money and banking. And I can't think of better people to talk to than my friend Andrew Spence. And Andrew, I got to tell you, you wrote a brilliant book. Basically, Are You Being Fleeced? About Canadians and their bankers. And it ain't pretty. And so we're going to dive in because we don't want to be fleeced, any of us. And so I thought it was interesting how you are really, gosh, the emperor doesn't have any clothes. So is it true Canada has the most expensive banks in the industrialized world, bar none?
Pretty much. Global management consultants McKinsey did a very interesting study on whether Canada was ready for the FinTech revolution, which I have to say is already no longer a revolution, but well-established competitive practice in many jurisdictions around the world, and we are pretty much the last to get there. And they had some very interesting statistics. They looked at the amount of revenue that Canadian banks are able to squeeze out of the economy. It's about 8% of a close to $3 trillion economy every year, pretty much 8%. Regardless of economic circumstances. And then when you start to drill even deeper into how profitable the banks they are, since the end of the financial crisis in 08-09, our banks have been able to squeeze out year in, year out, in the context of lower economic growth, higher compliance costs, return on equity of 16%, pretty much every year. And the closest comparable country is Australia at 11. So our banks have got a really good deal. We as customers, less so.
Okay, so I mean, I recommend your book to anybody who's interested in their money, which I think is just about includes everybody. But in this case, though, the point is you make brilliantly the facts and evidence that on the big numbers, the banks have it really good. And of course, we want them to be profitable and stable and all the rest. But on the little things, I mean, we all like to complain about banking fees, don't we? Among many other things. Gosh, we could do a lot better. So we think you would say we need more competition, period. It's not like a mystery as to what we need to do, is it?
Yeah, no, there's not. It's not. That's not a question at all, really, to ask. Economies that are more competitive have a higher standard of living. Now, banks are unlike any other industry in the world. We have to be very clear about that. They're a piece, if you like, of public infrastructure. We all use it. It's a piece of infrastructure that the economy simply cannot do without. It's a piece of infrastructure that cannot go down. And so banks are special. And that's why we have charters and licenses for our banks. Without them, we couldn't affect our payments. We wouldn't be able to get access to financing. So they have to be safe. But the key question is, at what cost, right? So banks around the world have formed pretty much oligopolies wherever you go. And we define an oligopoly in many different ways. But I think the best way to think about it is that compared to a competitive market, which is a stretch for banks, but the price will be higher, and the quantity provided, whatever it is you're providing, whether you would define that quantity as service or you would define it as loans, is going to be lower. So just to illustrate, Canada's small business sector is vital to our economic well-being. It's over half of GDP, 2/3 of jobs. The price that small and medium-sized businesses in Canada have to pay relative to large corporations is about 2.5%. And if we compare that, say, to the more competitive banking market in the US, and structurally it is quite different, but nonetheless it's a good competitive yardstick, it's only 1/2%. So our banks are charging 5 times what US small businesses charge.
Sorry, can you repeat that?
Yeah.
How
our
much?
banks are charging 2.5% over a large company loan, and in the US it's only 50 basis points. So our banks charge 5 times as much, and they provide.
Whoa, I didn't realize it was that high.
Yeah. And this is data from the OECD that the CD Howe presented a few years ago. And the Canadian Federation of Independent Business does a survey every 3 or 4 years. It's called Financing Main Street. And in 2022, the median amount of financing for small businesses in their survey was $156,000. This to finance and sustain half of Canada's GDP. Now,
wow, that's incredible.
yeah, and
So
that today, honestly,
so what's going on?
well,
with
what's going on?
Yeah.
It's a very good question. There are two pieces to the puzzle. Our banks generate about half of their earnings every year from fees, whether that's fees on checking accounts, credit cards, payments, you name it. If something's moving in the payment system, there's a fee. So if you're getting half your revenue from not taking any risk, there's a tendency to do more of that, right? And, you know, it's not clear when you think about it, right? Are small businesses underfinance because they're much, much more riskier? Or are they riskier because they can't get financing? It's a chicken and egg story. You can't call the banks big bad banks for doing this. They have a fiduciary responsibility to depositors and their shareholders, so you understand. But if they have incentives not to lend in favor of fees, then of course they will, right? That's the first thing to observe. They're responding to the incentives that they are given. Now, Basel III, which is the global regulatory standard, does mean that, just to get a little bit technical, on the risk-weighted assets that are applied to small and medium-sized businesses are much bigger than they are, let's say, to large businesses. And so that tends to attract more capital from OSFI. And OSFI has until recently been a bit of a micromanager in terms of leveling capital and ensuring that the banks have sufficient capital. So there are two things that are weighing against small business financing. The tendency to go to low-risk fees and an excessive amount of capital applied to small and medium-sized business loans.
Interesting. So you have a lot of demands, you know, on bankers. They've got all these regulations to meet federally, you know, provincially, but even from Basel, Switzerland. What does Basel, Switzerland have to do with our banks?
Well, this goes all the way back to the 1980s when banks were heavily under-regulated, and especially the United States, that has a sort of an ideological disposition not to regulate anything. They would sort of regularly have a financial crisis on their hands they need to deal with. And if one country is competing with another and it has lower capital requirements, and then that gives them a competitive edge. And so Basel became the meeting point to hammer out standards for capital for all banks around the world so that one bank didn't have a competitive advantage over the other. Okay, that makes perfect sense. And that we would have a degree of global stability in the banking system. Now, the capital requirements used to be very, very low, around about 4% of overall balance sheet. And of course, what we found out in 2008-09 was it's very easy to gain one control variable, capital. And once a bank's capital got to 4%, didn't matter anymore. The market said, that bank is insolvent, we will not lend to you as solvent players. And so we had a crisis of biblical proportions almost. So Basel II came along and it was, okay, we need more capital in the banking system, we need to have leverage caps, right? So now you've got two control variables, and now we need to have liquidity requirements. So you're not funding everything in one night, overnight, and you get caught unable to finance positions. And so bit by bit, the global regulators beefed up the standards for stability. And Canada had a good crisis, probably in some ways the worst thing that happened to us, paradoxically, because we just locked the system down at both the macro and the micro level. And we've been the only G7 countries, as far as I'm aware, to start to apply some of the real nitty-gritty micro capital requirements that make it even more difficult for small and medium-sized businesses to get financing. And I think, to be fair to OSFI, I think they've come to recognize there's been a degree of overreach, and it's time to pull back.
So, in layperson's terms here, and I respect you, Andrew, as I've gotten to know you. I mean, you're an economist. You've worked in the banking system. You have a high degree of, if anyone hasn't guessed, expertise in studying this area. So, you speak out of a lot of depth of knowledge here. But is this kind of like a Goldilocks situation where we don't want too much regulation? We want there to be competition and innovation. On the other hand, we don't want to be, on the other extreme where we end up getting into trouble because we just don't have enough choices for people. It's not serving the consumer here. I mean, like, who are we trying to serve here in this system? I guess is it because we don't really have a clear focus on who we're serving?
We put stability above all else. It was a German finance minister that once said, stability isn't everything, but without stability, everything is nothing. So we've sort of become very German with respect to the banking system. I think we've lost sight along the way of what our banks are here to do, right? They're here to provide financing to the private sector, to the public sector, right? Governments are a big player in our economies, so they need to have access to capital markets and payment system, and they're a very big player in it. What we have lost sight of, I think, in Canada in general, is a belief in markets and competition has atrophied terribly over the last 20, 30 years. And we've been asleep at the switch. We had an appalling Competition Act, written in 1986. It was written, it seems to me, by the people that we were supposed to be protected from. The fox was in that hen house raiding it every night.
Oh,
and so it just took us a while to wake up to what the net effect of that would be. I think the most damning indictment of how distant we have become from competition is not the list of oligopolies that we have. We know who they are, right? 2 airlines, 3 telcos, 2 railroads, 3 dominant grocers, thank goodness for Costco, and the banks themselves. Now, the United Kingdom, after the financial crisis, had a much bigger problem to solve than we did, right? Because of widespread insolvency. And with the consolidation of the banks and with the government of the UK being big shareholders in banks, they became acutely aware of how uncompetitive the system had become. And so they resolved to do something about it. With the advent of financial technology and the ability for what we call FinTechs to offer a multitude of different financial services as competitors to the banks, this was the first innovation ever in the history of sovereigns attempting to introduce competition to the banking system that had failed time and time again. This was the one innovation that did introduce a degree of competition to the banking system. And in fact, if you talk to the UK authorities, or in many ways, authorities in other countries that have also embraced the fintech revolution, they wish that they had gone even further, because it resulted in much faster payment services around the world compared to what we have here. And we can go back and look at that in a little more detail in a second. But it also gave people, from the comfort of their phone, 150 odd different providers of financial services at a fraction of the cost that their banks were able or wanted to provide those services. And yet here we are in Canada, almost 8 years after the UK introduced this. We still don't have an instantaneous payment system. We still don't have access to financial technology in a safe and reliable way. Now we're getting there, but we're still not there. Now the irony in all of this is by the time we get there, decentralized finance through the blockchain is about to make all that redundant.
I was going to say.
Right, so.
Yeah. Okay, so we're kind of behind. I mean, we've got these oligopolies. We know, like, you got to have competition. If you only have 2 or 3 gathered, it ain't competition.
Correct.
Nudge, nudge, wink, wink. They all signal within a very limited market. It's not a functioning market. So that explains why a lot of Canadians are frustrated, doesn't it, Andrew, with consumer choice? We just don't have consumer choice in this country because we got no competition. Is that it?
Pretty much. I mean, there is very little to differentiate the services that banks offer. Some of them might have a cashback option on a credit card. Another one might have travel benefits. But by and large, it's the same service. It's very amusing. I started a little business about 5 years ago myself, and I was looking for a credit card, a business credit card, so I didn't have to use my personal credit card. Talk about great timing. I did it in the middle of COVID. I said to my bank I wanted this. They said, yeah, no problem. And then they phoned me back a couple of days later and said, well, I can give you $1,000. And I said, well, that's not really very helpful, right? Can you do better than that? Well, no, because, these are difficult times. And I said, okay, well, you know what? That's really not very helpful. You're just fishing for $150 fees. So I'll just find a way around it. Thank you very much for your help. So that stimulated me to look on all the bank website, and every single one of them will offer you $1,000 credit limit on a business credit card. Now,
you're kidding.
No, every single one. It was exactly the same offering. Wow. So you don't go to, Bank Montreal, Scotia, Royal, TD, CIBC, National. You go to the bank. Let's call it Maple Bank.
Isn't that interesting?
Now, I'm having a bit of fun with this. There clearly is difference in quality of service. There's clearly, bits and pieces that are different. The cynic in me wants to say, well, that's just price discrimination at work, right? But at the end of the day, they're pretty much offering the same thing. Now, if I had a FinTech,
so we gotta
it'd be different.
Okay, so we got to unlock the banks, open it up for even more competition, and there's some choices that are opening up in Canada, which is great. I belong to not only a bank but a credit union as well, and there's other things that are emerging, but it ain't enough. We've got to get things really rolling here to catch up to a lot of other nations. So you mentioned the UK. There's all kinds of examples. The US. But just to be clear, what do you mean by FinTech? What is that all about?
Well, let's say that the example I give is I remember I was walking by my bank recently, about 6 months ago, and it said it was going to charge me $1.45 Canadian for every US dollar, right? And I thought, well, let's say I needed $1,000 or whatever, and I went down to the bank and I gave them 1,470 Canadian dollars, and then I got a phone call. My boss says, the trip to the US is cancelled. You don't need your dollars anymore. So I'd sell them back to the bank, and they would give me $1,400 back. Just like that.
Right.
Right? $70 trip into the branch. Yes. If I, for instance, was in Europe and I was on holiday and I needed to get some euros and I had my cell phone, I would go to my API, my application protocol interface, and I would say, find me the best price for €1,000. I'd get about 4 or 5 different quotes, and I can tell you that the bid offer spread would not be 7 cents. It would be a fraction of 1 cent, and there would be virtually no transaction fee. So that's competition, right? Our banks have slow walked this ability for us to have these choices because it will hurt their bottom line. Now, in some ways, it's not just the banks themselves, right? I mean, they have a vested interest in keeping competition at bay, right? It's inevitable that it will come. But they've also had cover from our federal government, right? They get the ear of the minister. Like, if you're talking to a FinTech, they don't have an open line to the finance minister, but you can bet your bottom dollar a bank CEO will have an open line to the finance minister. And that finance minister is likely to share the country's fetish for stability. And so it's very easy. Yeah. You can imagine the conversation. Well, Minister, you can do this if you want to, but I mean, you got data protection is a very important issue, and you wouldn't want anything to go wrong. And Oh, well, on your head be it, Minister, if that's what you want to do. And so we just haven't got there. Now,
Exactly.
we're having a bit of fun, right? But we've also had some real technical issues. And that is that we have not been, and we have been unable to build an instantaneous payments and settlement system. What we have with Interact is a messaging system. It sends a message to your bank to pay somebody else in another bank. What's called the clearing, making sure everything's in line, and then the settlement is done second to that. So it's not done at the point you send the message.
So that's why it usually takes a day or two to clear.
Yeah. So if you are in pretty much every other country in the world, that now exists. Payments Canada and their pals at Interact, private company, owning a big piece of public infrastructure payment, big components of the payment system, owned mostly by banks, we think, but we don't know because we don't know their equity holdings. It's not disclosed.
No kidding.
No, they finally got there. They told us in August it's ready to go. Beta testing is coming. Okay, well, that's a necessary condition. But I want, David, for you and your listeners to think about Brazil. Brazil decided they were going to get into this business. They have what's called a PIX system, where they conceived of, designed, and implemented it in 18 months. It's run by its central bank, basically. It's giving Visa, MasterCard, and the local banks a real run for their money. The cost is a fraction of what it was before. And it has brought, which is the most important thing, many of the unbanked into the financial system. And so it's had an enormous benefit. And we were trying to do this back in 2022. So part of this is culture, I think, right? There's an enormous amount of emphasis, and I've seen this in the organizations in Canada, which I've worked. An enormous amount of focus on the process and not so much on the outcome. And so the pursuit of the perfect is, we've known for a long time is the enemy of the good. So there's part cultural, there's part vested interest, there's part almost bureaucratic obstructionism for one reason or another, and fear of failure. So you put all those things together, and you can't. Tomorrow cannot be like yesterday because every day tomorrow has already arrived, and
Wow.
if you're not ready for it, how can you get the benefits from it?
But Andrew, you're getting at some very uncomfortable topics here as a Canadian. How dare you suggest our banking system isn't the best in the world? I mean, that's kind of the message I've heard for generations. In fact, I've even heard quotes from banks, and I won't even mention who the CEO was. An oligopoly is actually a good thing for our country. End of quote. I mean, this is really, it's a mindset, isn't it? This is kind of where you get into, and I know this is confusing, but people like us that are advocates for competition are almost very concerned that there's a lot of people in this country that are all about business, but not about competition. They're not the same thing, are they?
No. So Luis Zingales is a business economist professor at the University of Chicago. Animates this very well, I think. He says, we think we are pro-market, but in fact, we are pro-business. And even that great promoter of free markets, Milton Friedman, said that big business is not a friend of free markets. Big business will look for comfort and protection and will attempt to shape the rules of the game in their favor because everybody likes a quiet life. To be on the frontiers of innovation, you have to fear a competitor. And if you don't fear a competitor, then you become complacent, right?
Exactly.
So,
Yeah.
lawyers have a good thing. They can bill you out at fractions of an hour. And that's a fairly expensive rate typically. And if you challenge them on it, you're more than welcome to go elsewhere and face the same rate and the same turns to the game. So I say to people, how different is that from a tax, right? You have to pay it whether or not you want to. And there is very little differentiation, between the banks for fees charged for various of the services and the standard of the service itself. And so we like to think of our big businesses as being safe. And I think with people's money, you talk to the bankers themselves, they are, and I won't fault them for this at all, right? I mean, acutely aware that they cannot have any failure rate with people's money. Right? You can't.
Exactly.
And they work very hard to do that. And I don't think any of us would do anything but laud that, right? But how can an oligopoly be a good thing for a country when you are charged more for the service than you otherwise would be, and you get less of what you want, regardless of what that is? So it's very interesting. Canada's export industries have not done particularly well in the face of cold, hard global competition for a variety of different reasons. And if you go and look at the profitability of Canada's economy, what you notice is that because we're not very good at competing globally, our big industries domestically are accounting for an ever greater share of overall profitability. And it's not because they're driving growth. It's because there's no one there to compete with them. And so, I think you and I, David, have talked about this, but the fact that Canada has seen the US rather has grown its per capita income 25% more than Canada since 1980. All right, I'm always wary of comparing Canada to the United States because the economies are just so different, right? So different. Much more meaningful comparator is Australia. Very similar history, very similar resource sector, very smaller population. But there, we are 20% behind their per capita income. And the reason is quite simple. Yeah. They do promote competition. We, until very recently, have been asleep at the switch.
Well, it's very humbling pie to be fed here today from our friend Andrew. But I really believe at the center core of it is we've got a combination of really bad public policy. And that includes a lack of competition in so many sectors in our country. And I think that's illustrated by the departure, the leaving of a lot of money, some $900 billion since, 1990. We all know the stats. So I think most Canadians aren't aware of it. And this explains why our standard of living has stagnated. I mean, we've all seen the graphs, regarding the differences that you've just cited between the United States, Australia, many others. So this is what we need to really wake up to. Now, obviously, one of the key parties here is, of course, the role of government in regulating and frankly, allowing this to happen. So I wanted to share with you a clip by the senior deputy governor of the Bank of Canada, Carolyn Rogers. And I found it fascinating because she spoke recently about this whole need for more competition in the banking sector. But she linked it to an issue that I think she brought up almost a year ago in Halifax, if memory serves me correctly, about the need to, so she used an interesting metaphor. She said, we've got to break the glass. This is an emergency when it comes to stagnating productivity in this country. And we know that productivity is foundational to our life. Like our kids don't have a future if we don't address this, right?
So there's a couple.
So she spoke to that. Does that give you hope, Andrew?
Yeah, I mean, in the sense that it raises awareness, right? But we need, when you do rowing, if everybody's not rowing in perfect time, you get what's called checking in the boat, right? It's not making any progress. And so we need all players to pull together, right? So that means public policy needs to be focused on eliminating the years of accumulation of feather bedding. We need an urgency mindset in Canada. Yeah, right. We've allowed things like non-competition clauses to fester in the labour market, which means that you're not at liberty to go and get a better job if you can find one at a higher rate of pay. There's a tendency not to take advantage of labour market opportunities for fear of failure. So that's cultural. But Mafina Bawakwali and I at the CD Howe did a paper a couple of years ago where we looked at the capital stock that's available to Canadians relative in specific industries relative to other countries, and Canadians have half the capital stock to deal with compared to other countries, which means we're running obsolete technology. We probably have Windows 95 if we're lucky. We have training manuals that gather dust in HR departments because the boss says, Spence, what do you want to do? If you want to live in a castle, you got to work in a cave, right? So investment becomes a cost to be cut.
Oh.
And so if we don't have competition, then our large organizations will at the margin chip away costs to the point where we are denied investment in the latest technology. We are restrained from going to conferences to find out what best practice is in the world because it costs money. And so, these are the effects that lead to weaker productivity. We don't have the technology that others have, and we're not trained how to use it, right? So with the advent of artificial intelligence, you're not swapping a flip phone for an iPhone, right? You are being given a whole new way of doing your job. And it's not just a question, of saying, I've got this huge workload, it's going to help me reduce it and I'll become more productive. It's almost saying, what can you do that workload is no longer necessary?
Exactly.
So I don't know the degree to which, and because I'm not in them anymore, so I can't speak to that sort of anecdotal knowledge and familiarity any longer. But I would think that if you want tomorrow to be like yesterday, there's no real change in application to get this technology to do the best. I hope I'm wrong. I seriously do.
Right on. Well, I want to play this clip from Carolyn Rogers because she has a very interesting introduction. It has to do with how many people actually switch from their bank. And I'm curious about your reaction to it.
So this is one clear example of the productivity benefits that can come from more competition in a network sector. The second innovation in the works in Canada is open banking. In essence, open banking shifts control of your financial data from your bank to you. It creates a set of rules and standards that let you safely choose to share your data with other banks or with third parties, like a budgeting app, an investment platform, or a credit application. This has all kinds of potential uses, but one very important one is that it will make it easier to compare banks and to switch between them. Now, Canadians don't currently switch their banking relationship very often. A survey of 4,000 Canadians in 2020 found that only 6% had switched banking relationships in the previous year. And a more recent survey reported that 69% of Canadians haven't switched their primary bank in a decade, and 29% have never switched their primary banking relationship. Now, I'm willing to put some of this down to good service and satisfied customers, but not all. If you've ever tried to move your banking relationship, you will know it's fairly daunting. The hours of research, the reams of paperwork, missed payments, delayed deposits, and fees, lots of fees. So picture a future where you could load your banking data securely into an application that would research and recommend options for you to save money or get different products or services. You could then pick a new bank, have your data sent directly to that bank so they could use it to qualify you for the products and services that you want. All your credit history would be there. You're not starting from zero. Your new bank could then recreate all your automatic debits and credits so that your payroll would show up on time and your hydro bill and your car lease and your rent would all get paid on schedule. Now, combine open banking with real-time rail, and not only is all of this a lot more convenient, but it's faster too. There's work to do, but this is a future within reach. The Canadian government first introduced the idea of open banking in its 2018 budget and put a legal framework in place called the Consumer Driven Banking Act which passed last June. Further legislation is needed to bring this idea to life, as well as regulations that obligate financial institutions to participate and minimum standards for other firms that want to be involved. Then technical standards need to be developed along with a supervisory regime that will maintain safeguards for consumer data and minimize the risk of fraud. Just like the payments highway, we want it to be open, but we need it to be safe.
So, Andrew, what do you think about Carolyn's Rogers' vision of having open banking in Canada? And why the heck don't we have that now?
It's a very good question, isn't it? I don't know where to begin, other than to say that we should have all those standards already, right? So there are three things you've got to do, right? You know, you've got to have the right technical standards. You've got to have consumer protection. And the third is you've got to have a focus on efficiency and competition. Because if you don't have that focus on the last piece, then why are you doing it in the first place? So why did we want to look at this in 2018? Because the UK had already introduced it? Maybe, right? I mean, they do talk to each other. Maybe that'd be a good idea for Canada. Why didn't we think about who owns the consumer data, right? The banks want to own that data because it gives them control, but it's my data. I should own it. They're the custodians. And why wasn't...
But just to clarify, if you don't mind me interrupting, Andrew.
No.
I mean, that is such a critical point.
Yes.
It's your data. It shouldn't be the banks. It's your data.
So the United States doesn't have an open banking either, right? Because the American Bankers Association is about as powerful as the Canadian Bankers Association. And, you know, Jamie Dimon, you know, he's known for his rather direct, domineering approach and has said, hey, FinTechs, I'm going to charge you so much money for this data, boy, it's not going to be worth it.
Yeah, we'll just squeeze you out.
Yeah. So this is very important. And, you know, I've already sort of touched on the Canadian Payments Association, as it was rebranded Payments Canada. They've had a litany of different governance issues, right? Moving at the pace of the slowest. Typically, the one bank that stretches to meet the new technical requirements will sort of delay it because it has to provide that 16% return on equity. We've got Interac in the middle. Interac likes things the way it is, and so does their owners. You know, our political leaders have not seen the value in open banking for the population until it's too late. In fact, one of the finance ministers over the last couple of years has actually expressed, you know, a less than enthusiastic perspective on open banking because, quote, I like stability, unquote, right? And so was facilitating the slow walking of open banking forward. I thought Carolyn did a fantastic job of laying out just how powerful open banking is where it's been tried. What I struggle with a bit still is why the focus, and you hear it at the Competition Bureau as well, why the focus on switching banks? It doesn't matter anymore if you've got open banking because, you know, I have 150 different people to get my services from. My banks just, you know, takes my paycheck, right, on my client invoices.
Because we know what's best for you, right?
Well, I don't know, but I mean, you know, but it is funny. I was at a gathering, a meeting to talk about some other issues, and one of the participants in the sort of preamble and getting ready to speak was saying, well, yeah, I've heard about this API thing. Like, who wants to do their banking that way? And I was thinking, oh, man, we're going to have a long, rough road. But, I mean, at the end of the day, right, as an economist, you know, it's not the average that matters, it's the marginal that matters, right? So if somebody can come along and sustain a lower price and better service, then that will benefit us all, even if you stay at the bank you're currently with, because you're comfortable with it.
Right on. So as we kind of wrap up this very fascinating discussion, I hope that our audience has learned as much as I have as well about the state of banking in our nation, the need to unlock it, to unleash all this entrepreneurial insight and opportunity. My question is, who cares? Like, why should Canadians care about this issue, Andrew? Does it go right to our standard of living and more?
Yes, it does. I, as a Canadian, have less capital equipment to work with than others because our major employers don't have to provide it. They can bump along. Tomorrow could be like yesterday. The investors are happy, and I've got an easy life. If I want opportunity, people, like, it's very interesting, right? My view is people don't leave countries for different tax rates. They leave countries for opportunity. We don't have a vibrant commercial sector to the extent that there are new job arrivals on a regular basis, so that you can take command of your own career and manage it in the way you see fit. Because if you lose a job in Canada, it seems to me, unless the economy is doing absolutely fantastically, it takes a long time to find another job because the job arrivals aren't there. And what we have seen in Canada over the last 20, 30 years is that new firms are born every year, old firms die every year. But firms are dying more quickly than we create new ones. And what that means is we are not creating, we are not engaging in discovery, right? Which is to see what others see and think what others don't think. That get an opportunity, that develop a business. This is what is slowly killing us. And it's because we have neglected to engage with markets, to value competition, to promote competition. And we have finally woken up to that with the redrafting of the Competition Act in 2023, I believe, and then subsequent changes in 24-25, which now finally empowers the Competition Bureau to go out there, snap out sharp practice, unwind in restraint of trade practices, and at least give us a chance. But we do need leadership at the end of the day. Political leadership is important both at the federal level and the provincial level. And let's hope, because there's not one jurisdiction in power that doesn't want more of it.
Okay, very interesting. So we're on to something here, Andrew. You want to open up competition, and we need the leadership. We need the good public policy to do it. And this matters to every Canadian. This is really an existential issue. As we talk about concerns about sovereignty of Canada, this strikes to the heart of whether we're going to be the most prosperous free nation in the world. And we could do that. I mean, if you look at the scale of our country, it's people, but it's almost like it's part of our culture. We're denigrating what it means to be entrepreneurial and to be able to be Canadian and shape your own future. Is that how you see it as well?
Canadians are some of the highest educated people in the world. They work extremely hard, but they are held back by vested interest, by misplaced beliefs that we do have functioning markets that we really don't, that we should be pro-business when we probably should demand better of our business, and we should demand better of our political leaders. When you talk about a place, any place, it doesn't matter whether it's Canada or a city, Calgary, Toronto, Vancouver, New York, you talk about an attitude, and each place has a different attitude, right? There's a degree of acceptance, and there's a degree of rejection. And why do we accept what we have when we could have better? If you read my book, there are two reactions to have, right? One is to say, this has got to stop. And people that have interviewed me about it have said it has made their blood boil, or they've wanted to throw their tablets against the wall. Or some people say, Andrew, you've given me the belief and commitment to go and buy even more bank stocks, because this is Canada, nothing's going to change. And I find that disheartening. But I would encourage anybody, if you want Canada to do better in the future, and I'm an immigrant to Canada, I would like Canada to do better, then demand better, ask for better, don't accept this, oh, there's nothing we can do, mustn't grumble.
Right on. So when you talk about doing better, Andrew, what role does regional capital markets play? Like all those incredible centers across the country, and we know historically they've been there from Vancouver to Calgary, Regina, Winnipeg, all kinds of other places. And you know, our mutual friend Russell Kalmakoff speaks passionately about this issue every day. What role do they have in moving us forward then as a country, as an alternative to banks?
All the challenge with when you have open capital accounts and open current accounts, every asset is substitutable for another in a global pool of liquidity. So I'm not sure that, you know, to have a capital market in Calgary is better than having one in Toronto. It's more the question, I think, about what's the plumbing that gets the money to the opportunity. And if that means that instead of having a credit officer in Toronto that flies to Calgary every second week to make loans, you should have people locally doing the loans, right? They should, you know, one of the reasons why the United States is so more successful in sustaining its small and medium-sized business sector compared to Canada is because it has these what are called small and regional-sized banks with assets anywhere from 10 billion to 100 billion. And they will know the local business owner. They will have known them for a long time. They meet them regularly. They see their financial statements monthly. They keep in close contact with those organizations. They offer them advice. They offer them help. They might make that extra loan in a very difficult time that a bank which is more remotely located wouldn't. So do you need a stock exchange in every small regional area? Probably not. But do you need agents on the ground that know the businesses, that know the entrepreneurial culture, that can help make those markets work better? And I think that is a big part of it. When you see in Europe, all through the sort of 1980s, all European capitals had these big trading operations. Like, so Citibank, for instance, would have a big trading operation in every European capital. And what they found was when they looked at it, half the time they were cancelling each other out across the whole European continent. So they decided, look, we're going to make prices for everything that we have in London. But we will, for all the traders that we retire or bring to London, we're going to replace them with a local salesperson, a local relationship manager to deepen those businesses, because people don't really care where the price is made. What they care about is that they can get a price. And that came from the presence in the local market. And that for them was a phenomenally successful innovation in the early 1990s.
That makes sense. So, Andrew, we've certainly had quite a discussion today about the need for competition in our banking system, and banks are very important for our success as a society. If you were a special advisor to the Prime Minister, is there an easy point of advice you'd have to, well, our Prime Minister, who was the former governor of not only the Bank of Canada, but of the UK?
Yeah.
What advice would you offer him?
Well, Mark's already knows the open banking brief very well because he was part of that whole process when he was governor of the Bank of England. And my understanding is that he felt that that was a very important innovation in UK financial markets. So I can only assume that he would hold the same view about Canada as well. And, the advice I would give him was, you've just got to be tough with the bank CEOs and Payments Canada and anybody that is dragging their feet in the introduction of this new technology, and that take a leaf out of the book that was followed in the UK, which was have a well-financed entity that oversees the implementation of open banking, because the most important thing is to achieve the efficiency and competition objective. Not only that, but the UK assigned what they call an implementation trustee, essentially an arbitrator, and said, if you guys can't come to an agreement on how this works, then I will make the decision, but it's getting done. That's what we need. We need leadership, and we need some toughness, right? Enough of this dragging your feet, oh, minister this, oh, minister that. Yes, minister is the answer we need.
Well, I like the way you think, Andrew Spence. Let's get on with the competition, and we need leadership and good public policy to do it, to serve us as consumers. So thank you for joining us for this incredible conversation.
David, it's been a pleasure, and thank you very much to you and the Institute for this opportunity to appear. Thank you.
Thank you for watching Leaders on the Frontier. We're a nonpartisan think tank. We explore ideas, policy, and practical solutions that can make a difference in the lives of Canadians. We do not accept any government funding. We work for you. Thank you for supporting Frontier. Visit fcpp.org to give. While you're there, be sure to check out our latest articles and research. Without open discussion and debate, you're not thinking, nor are you free. Comment below. We'd love for you to join the conversation.